Whole day so far. Price action wise, that is. Hey, Ralph. There is one today. There we go. All right, YouTube should be streaming now. I think the solar eclipse has also eclipsed the market. It's just boring to say the least right now. It is. Hey, Petro. Robert, how are you? Echo's here. All right. Morning. Well, try it again. Well, it's floating around. I think for us, it's going to be like between 3 and 4. The eclipse.
What one?
No.
All right. Let's stay panelist. Good morning, everybody. No, again, we start out so low. Is there did we get everybody get their notification? Yeah, well, Zoom link came on Telegram. You guys get emails? Good morning, everyone. Let me turn this down. Go ahead, turn yours down, Matt.
Mhm.
All right, Petra got the email. How are you guys? Larry, Jim, Terry, Echo. And a bus to see eclipse. Yeah, I'm not into that whole eclipse things. Not doing much this morning, but previously out of Amazon with a 41% return. Did you get that, Matt, from Ralph?
See it.
Yeah, make sure you get all of that. I hope you guys made a little money on Amazon. If you guys don't know what I'm talking about, you should join the pit. I gave folks a swing trade on Amazon overnight. We got in at 148 something. The option was about $4 and something cents. $4.90, and we got out. The option was about 620, 640, somewhere around there. Oh, and you made money on RTX, Kava, and Starbucks. How did you make money on Kava? Is Kava doing something? I thought Kava's just kind of Kava looks like it's about to go up actually, but it doesn't look like it did much this morning so far. But RTX did good. Larry made money. This is we got to do. We got to keep Matt busy today with the gains. Uncle Lawrence says, quick $600 on Amazon. You should join the pit. Adam made $1,200 on Amazon. Oh, Peter bought PayPal. I may want to buy PayPal. I'm looking at it right now, but I'm not long PayPal. All right. Let's give the room another few minutes to broadcast. And yeah, if I'm not in a trade, if I'm currently not in a trade, you guys can talk about it all you want. If I'm not in that trade in the pit right now, if I'm out of that pit, the trade, or if I mentioned it or whatever, you could talk about it till the cows come home. As long as I'm not in that trade. That's really the only rule I have. Good. Terry made look at that. Yeah, 420 out at 640. Yeah, I was pretty close. It's pretty close. And I mean, everybody got in at a different price, I assume. All right. Oh, on the put. Okay, that makes more sense. I didn't know what you were talking about. It's like, how did he make money on the Kava call? Well, we'll go BWAP Ditcher. We'll talk about it in a few minutes. Actually, we'll talk about it quite a while today. Scott says, I am a cash machine. Now, that's a good t-shirt. Go ahead and get that, Matt. Cash machine. Yeah, we didn't have any losers last week in the pit at all, actually. Mike made 40% on Amazon. Carrie made 38% on Amazon. One more minute, folks, and we'll start. Just one more minute. I always like to give folks a courtesy 5-minute start. And then we will begin. By the way, speaking of begin, let me just share my screen while I'm here already. A little interesting thing here. Have you guys noticed this? This is Trump stock. again, the point of this is not to get political, and I couldn't care less about politics in this case. But I just wanted to point out to you that this stock, thank you, Mike. They keep coming and coming. If you guys made money on Amazon, post it for Uncle Roger. That was a pit trade. So don't ask me how come you didn't get it. You got to be in the pit for that. So this is the DJT stock. You know, it went up like crazy about 2 weeks ago, and it's been doing nothing but going down. One thing I will tell you about the stock, and again, don't rope me into a political discussion. But what I hear is that people who are buying media on that company are not having a really good success. And I'm not hearing that from like newspapers. I'm hearing it from people I work with because I work with a lot of media companies. And what they're saying is and that's not a good sign. So for whatever it's worth, I have no investment in it. I'm not buying it. I'm not selling it. I'm not endorsing it. I'm not denying it. To me, it's just a chart. Now, speaking of chart, looks like it's got, again, please don't try to equate this to Donald Trump. It's a company. It's not really connected to him at the hip, okay? He can't control when a hedge fund buys and sells, just like I can't control when a stock goes up or down. But I'm only telling you what I know. Technically speaking, the stock has about the 100-day moving average. If it breaks the 100-day moving average, it's probably going to, they don't get stuck here very often. The 100-day is more of a minor compared to the 200 and the 50. When I say minor, it's worth 40%, where the other ones are worth 45% each. I don't know, something like that. It's not that minor, but in comparison to the 50 and the 200, it's more. So it tends to go through it. So we'll watch out for the 32 area. And then if it breaks the 32 area, I may be inclined to take a short position because I would expect for it to bounce and go higher till then. But I would also expect, the stock to fluctuate a lot with Trump's campaign logically. And if he looks like he's winning, the stock is going to go up. If he looks like he's losing at any given moment in time, the stock is going to go up. So I would imagine it would be a really good barometer for how his campaign is doing at any given time. But again, you know, there's a lot to a stock, and it's not a representation of Donald Trump. Whether you like him or you don't, please don't consider this tie. This is not his twin, okay? It's a company that gets a sentiment from him. Adam says, I think the success with the PID dashboard is groundbreaking. Thank you. You go ahead and post that too, Matt. Thank you. I appreciate it, Adam. All right. So I wanted to kind of talk about it because it got on my radar because it crossed the 50-day moving average on Friday and I missed it. And now it's coming between the 50 and the 100-day moving average. What is a fair value of the stock? I'll tell you what the fair value of the stock. Let me see. It's a good question, right? Fair question, Paul. DHT. So let's do this. Anchor the VWAP right here. And now let's take the VWAP and anchor the VWAP right here. Very volatile. It's very volatile, but it's the fair value, guys, it hasn't, let me be very truthful with you. It hasn't established fair value. It's been constantly out of balance. If you want me to tell you what I think fair value is based on right now, I would say somewhere around here, somewhere in this area right here, somewhere in the $39 level. But again, it hasn't been balanced. I mean, the stock was balanced here, but what it was worth here is nowhere as much as it's worth now because the odds of Trump getting elected a year ago were nothing compared to how it is right now. Yeah, so be careful. But I would say right now, somewhere right in this area right here. But it's not. It hasn't had balance since it's been in play. And in order for you to, that's a good lesson for you. In order for you to see what a fair value of it, it's going to be balanced. Let me give you a great analogy. Let's use something that everybody knows. Okay, real estate. Okay, so let's say that weren't in a market, okay? And let's say the homes in your area in the last 4 months went from, hey, Kathy, good to know. Get that from Kathy, would you? Thanks, Matt. Thank you, Kathy, and I hope you're doing well. So let's say that home prices, and I'm making these numbers up as I am going along. They have absolutely no relationship to reality. Okay, it's just thank you, DB Cooper. It's just to illustrate a point. The point is this: when let's say that I tell you in the last, you say to me, hey, what's the value of the homes here? And I say to you, well, let me tell you this. In the last 3 months, they went from 300 to 400 to 350, back to 300, back to 350 to 400. You'll be like, man, they're moving. What's the fair value? Hard to say. Let me give you a different scenario. In the last 6 months, homes went from 350,000 to 375,000. Now I can give you fair value. Do you see the two different scenarios? This stock is the former. That's the first scenario. It's all over the place. It hasn't become balanced yet. If it hasn't become balanced yet, how can you determine what fair value is? It's very hard. Now, can we do it? Yes. Would it be very accurate? No. No. I don't want to blow smoke up your ass. It's not, because it's been all over the place. But if I had to put my best guess, I would say somewhere right here. Because look at how long it stayed here. It stayed here at least from January to March, and then it went up all the way up there, and now it's still right back at this line right here. And this VWAP will be right here if the price stays right here for the next 24 hours. So oh, interesting, Adam. Good information. So my 5 cents is that fair value is somewhere right here. $39 in ball, give or take. Hopefully that answers your question. Okay. I know I always take forever to answer a question, but that's usually because I try to teach you stuff. I don't want to just give you a this is this, this is that. Okay. Just erase this. You could see my screen, right, Matt?
Yep.
Okay, great. Great. Two potential shorts right here, McDonald's and Lamb Weston, both looking really good. Just I'm just throwing it out. No problem, Paul. My pleasure. Anything to do to help. So you don't have to waste time and figure this out over the next 10 years. Okay. In terms of earnings, I showed you guys this morning. I did this real quick. I'll do it again very, very quickly. And I'll post them for you right now here as well. There you go. These are all the big earnings. Good morning, Sharab Lepka. Hopefully I pronounced your name right. Anyways, I just posted the earnings. There's nothing till Thursday, Wednesday. We have airlines. These are very insensual stocks. Ooh, the S&P just broke down a little bit. We'll talk about that in a second too. Airlines. Whenever you see an airline stock, a chip stock, something that's very commoditized, something that's relating to energy prices, it's a good time to start looking at implied volatility. The only one I see that's really raising my eyebrows, and I'm being nitpicky, is this CarMax. It's looking at 8.6. When implied volatility is higher than you think it'll be, that's when you want to sell strangles. And if you think volatility is low and it's going to blow up, that's when you want to buy strangles. I showed you a real example last week, one that you could have made money on the NASDAQ and the SPY, both on Friday, I believe, or Thursday. I showed you an example of how to take advantage of strangles, what a strangle is. And I decided to show you not by giving you a lesson, but by giving you a trade. I figure by the time if I give you a trade, the odds are you'll take it more likely than just absorbing a lesson and make money on that trade. And you won't forget it either. I got to try to figure out ways to manipulate you into listening to me and paying attention. So these are the earnings. So as I was saying, you have airlines, You have CarMax. This will impact car used car dealers. I think this number is going to be fantastic. By the way, CarMax. You've got consumer staples, and Friday you've got the banks. You got banks and insurance company. You have financials reporting. Do I think financials are going to do crazy good? I think, and listen to what I'm about to say, Matt. I think financials, you remember what I asked you to take earlier today. I think financials are going to stay strong at least till Friday because of the reports. And then I think they're going to do okay during the reports financially, but technically they've already gone up quite a bit. So I don't know for sure what we should be expecting from the financial sector, but I don't think it's going to be one of those big surprises. I think it'll be kind of like, yeah, we've been gearing up for a while, buy the rumor, sell the fact kind of a thing. That's what I'm thinking for financials. Um, I said the same thing though last quarter for tech, and I was dead wrong. So again, we're gonna go. We're gonna go. Strangles are losing. Ralph, I said you have to take them when. Well, first of all, straddles and strangles are two different things. Second of all, content. When you have a big move, that's when you do a strangle. All right. Yeah, I'm going to talk about that in a second. So, banks are starting to report on Friday. It doesn't matter what I think. I'm going to be trading the price action, but based on what I'm seeing, in my opinion, and remember, you're not going to get the kind of momentum out of financials. Then you got Jamie Dimon always saying something nasty. Um, so you don't get that momentum. You don't get those momentums. Are those estimates half in either direction? I don't understand what you're saying, Angie. Yeah, Terry, there may be basically my point is the banks may end up being buy the rumor, sell the fact scenario where they look good, and then the earnings come out. The earnings are good, the earnings are solid, but the stocks don't really do much because they've already done much. That's kind of the scenario that I'm 3 points positive, Angie. Okay. So that's Friday. So we kick off this Friday. It's funny. It's almost like we just finished, right? But we're just getting started. Um, where was it? Was I data this week? I'll talk about that, Michael. I'll talk about that. Economy calendar. The big report is obviously going to be the CPI, followed by the PPI. Both reports will come out before the opening bell. These reports are very important right now because the Fed is like, Powell, you better stop telling them that. You better stop telling that stupid kid that dense kid he's getting that bike ever. He's probably gonna have to get a job to get that bike. So it depends. A lot of it depends on this news, but you could see very clearly how the Fed is changing their tune. Between you and I, they're changing the tune even more aggressively than I expected. I thought they were still gonna. Uh, well, maybe now they're saying maybe we shouldn't have one this year. So I think we're gonna have one this year. One this year. What's going on with the kid? How's he dealing with it? Well, this morning, if you were in my morning call, I talked about the bond market. I talked about the bond market was down here, pre-open. And I said, hey, if it opens up, it's not going to be breaking down, but it's not a good sign. And even today, it huffed and puffed. And what did it do all day? Went down. The kid is getting through he doesn't want to believe it. He doesn't want to accept it, but he's been hoodwinked by his parents. You don't have to, Sharab. You don't have to do any of that. Just chill and relax and enjoy the show. You don't have to acknowledge me. Just the numbers will speak for themselves. All right. So this is not good, and it happened earlier than I thought. Why? Because the Fed is not being as cute as I thought they would going to be. Remember, they can be very cute for a long time. Yes, we're gonna 4 times a year, 3 times a year, 6 times a year. You know what? Maybe we're not going to even lower them at all. Yeah, that's. I thought we would come to this conclusion where we're at right now, closer to here. Honestly, I did. I told you so, but it happened sooner. I ultimately thought we were going to break down from this triangle, but I thought it would happen later on. I thought they would go from. It's not going to happen 4 times, but it'll happen 3 times. Oh, okay. It won't happen 3 times. It'll happen 2 times. Oh, okay. It may not even happen. Ba-boom. But you guys understand what I'm looking at, why I'm looking at it, and how I'm looking at it. That's the key. You need to understand it so you can mimic this. Um, that's the second thing. In terms of market exposure volatility, let's talk a little bit about that. We we couldn't take out Friday's high. That's bad. Not only could we not take out Friday's high, but we broke down below the VWAP, and price action is extremely wimpy right now. See how the candles are overlapping? I mean, on the way up, we actually broke up a little bit here, but on the way down, I mean, we opened flat. We looked like we were just continuing from Friday. We had three nice candles that said, "Hey, we may be doing something." And then as soon as the market came to this area right here, the 520 area, it came right down, right down. And this is a nothing burger right here. This has very little. This is very random selling. There's not a lot here. Very typical for Monday. This is when hedge funds are not aggressively doing anything. They're basically rebalancing. Do I think today's going to be a trending day? No. Just spy. You see this? You see this? This we've been building this for a while now. I still haven't moved it yet. Notice we're still outside. I'm not really in a hurry to go long. As I mentioned last week, I'll have plenty of time to go long once we break the high here. See, this puts us in a very, very interesting perspective right now. Also, if you were in my morning call this morning, you would have remembered what I said. The odds are we're going to go up and then break down. We're not going to go, and more likely than not, it'll take us all the way up here and look like we're breaking through. This is what I would do if I was a hedge fund. If I was Griffin, this is what I would do. I would start buying very, very slowly. I would trigger the buy stops right here, sucker in all the retail traders into thinking we're going long. And see how these candles right here, these three candles, they're lower than each. So what I would do is I would create a level right here. Right there. Right here, and this bar right here would literally come up to this bar, hit this bar, or if I really wanted to pull a fast one on you, um, Sharab, do me a favor, stop posting. Stop posting, please, Sharab, stop posting. Please. If you have an email, send me an email. Just stop posting. People here are trying to focus. So I think we're going to come right into this little area right here, and I'm being pretty specific. Or we may not even get to that area. But if I was a fund, I would make sure we break this area right here, take us right up here, and then come right back down. Kane says, I can't get back in. I get another talk by Roger. Get back in. Where, Kane? You're here. You're posting. I don't understand. I'm confused. How could you not be in if you're posting? All right. Any questions, concerns, comments, feedback, customer service? So I think the SPY is going to hit resistance. Now, if we have really good if we have really good CPI and we have really good PPI, and if the bank earnings start coming out really, really amazing, and if the employment data stays over, so if this happens, and 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 that happens, we have a chance of going higher. Otherwise, we're going to just consolidate here, and that'll be the top. I don't know what will happen, and I couldn't care less. It'll make absolutely no difference in my trading. But if I was a sneaky hedge fund manager, I would take the market right there. That's what I would do. And I would take it right down to the bottom of this range. And I would keep doing that. And I would create nice volatility and shake every one of you out. That's what I would do. Yes, Terry, too many ifs, which means, but notice what I said, but what has to happen for the market to go down? None of those. Just if those things all don't work out, the market's going to go down. You know why? Because the Fed did it again. They created a scenario. They made everybody happy. They started telling everybody, giving people false sense of hope, and started telling you that interest rates are going to go down. Remember, interest rates were going to go down in March? What did I say about that? Do you remember interest rates were going to go down in summer? What did I say about that? That kid ain't getting that bike, folks. That bike ain't coming, right, Matt? And look, we're outside of this beautiful channel that we've been building for a very long time. We're not in it anymore. We're outsiders. We're not insiders anymore. Remember Circle of Trust? Remember that Meet the Fuckers? Do you remember that that movie with Robert De Niro? Remember, Matt? Circle of Trust.
Yeah.
We're no longer in this. This is the Circle of Trust. We're not in the Circle of Trust anymore. So I'm telling you things as they are. I'm not telling you how things will be. I'm not telling you how things were. I'm telling you how they are right now, whether you like it or not. Don't like the bond market here. This will put pressure once we break again for the second time. We already did overnight. Don't like the SPY here. Semiconductors aren't really looking all that pretty either, by the way. I mean, they're not looking bad, but they're not looking fantastic. Yeah, Circle of Trust, right? Remember that? So that was a good movie. So I'm not feeling it right now. And today's a very sloppy day. So now with that said, let's look at our stocks. You have a good framing, you have a good understanding of what's happening right now. You know exactly what I'm looking at. We have a game plan. We have a game plan. We could take advantage of this market now in a smart way. So now let's look at and by the way, as I said, next time the Fed tells you inflation's going down, just show them a graph of this. That's food, that's agricultural prices. Food, as we call it. Food. Yeah, since January of this year. They only went up 20%. Only 20%. What's 20%, right? I'm sure your wages went up 20% too, right? Don't get me started. All right, sectors that I like. XLC. I still like XLC. I like XLF, Matt. Remember, Matt?
Yeah.
Mhm. I like XLB. I like basic materials, especially with if inflationary pressure persists, you're going to see basic material prices go higher for obvious reason because they're inflationary. I never said that, Paul. I don't know. I haven't analyzed it well enough to give you that information. So those are the three sectors that I like. I like financials. I like basic materials, and I like communication sector. All right. Stocks that I like to the upside. We'll do the upside first today. APH. Let me pull up a different chart. One second. One second. I got it. Okay. Sorry, folks. Okay. Sorry about that. Claire, we still have another week to go. We'll see. We'll see. Yeah, seasonality. And by the way, I send you guys a note in Telegram channel from Goldman Sachs. Not from Goldman Sachs. That was from JP Morgan. Look what they said here. So far, I'm not seeing it, Claire. Here. The S&P averages 26 basis point in May with 17 of 24 years, 71% accuracy. June tends to be negative. July has been the third strongest month behind November and April. See that? It's not just me saying April is a very strong month. It's JP Morgan too this morning actually. This is their morning. This is their report to their institutional trading desk. Just FYI. Yeah. That's what institutional traders get in the morning. Okay. I'm waiting for the SPY to make a Hakan. If you guys see a Hakanashi green reversal on the SPY on a 5-minute, would you give me a heads up so I don't have to go back and forth and look? All right. Thank you. Maybe, Perry. Maybe. We'll see. We'll see. We'll see. The market just went negative. It's negative for the day. Everything is red. I'm glad I didn't go on the trigger. Okay. APH. This is daily. This is 5 minute. This is the daily. I love buying it when it comes to these 8-day moving averages. So I would say wait a little bit longer, Matt, but maybe put an alert at about 115.32 for APH. What do you think? Right at the 8-day moving average, right at the low 115s. Johnny, hawkishness like a hawk, dove like a dove, dove lower rates, hawkish higher rates means inflationary. Hawk takes everything up. No, no, I said a reversal Hakanashi on a 5 minute on the SPY. I was very specific. This is what a reversal on the Hakanashi looks like right here. Look, for anybody who doesn't know, look, I'm looking at APH. This is a flat bottom. That's what's called the Hakanashi reversal right here. So if we're looking at the SPY, right there. Now, if this candle closes like this, that's a reversal Hakanashi right there. Okay. If it closes like this, that would be a reversal on the SPY, and that means the SPY is ready to go higher, according to the Hakanashi. All right, let's continue. APH. Bullish once it hits this level. I already told you the level. We would look at option chain. Option chain here. No wicks below. Flat bottom candle for the bulls. Flat top candle for the bears. By now, you guys should know what a Hakanashi reversal candle looks like. You really should. That's a Hakanashi reversal candle. See? Flat bottom, all flat bottom. That's a reversal right there. See, I'm looking for this to happen in the SPY. That's why I'm asking for it. No problem, Paul. Look at all this stuff you're learning. Hakanashi, VWAP, all this fancy schmancy market talk. I'm in a good mood. I had a nice weekend. My wife made lobster last night. Right here, points. Oh, just turned 0.70. 115 calls, 11 days remaining. It's like first time I had lobster in like 5 years. Never makes lobster. Decided to make lobster last night. Right here, 115 call. April 19th expiration. APH 115 call. Yeah, it was good. It was good. So let's see. Did we have the reversal? Let's see. Yep, we had the reversal candle right here. And what's the SPY doing? Wow. Right, next one. YPF. Why do I like this stock? Well, it's an energy stock. What else do I need to say? Very inflationary. Look at that, Matt. Almost touched the 8-day EMA today on the bottom side and popped back up. Not extended at all. Your stop would go right here below this pivot at 1930. You would go about 11 days. Actually, I would like to go 18 days out here because we could. And we would go to a delta of 72, which would put us at 2050 call, which is exactly 2 strike prices out. Look at that. Imagine that. Let's continue, shall we? BSX. A little choppy, but moving straight up. Touch that moving average today. Coming right up again. Stop loss probably right around here, 67.30. We would go 11 days out. We don't want to go 39. That's too much volatility there. 70 delta will suit us perfectly. 67.50 call. BSX April 19th expiration. Yeah. We'll see. We'll see what happens. It's been in that lower area. I covered it extensively this morning. I don't want to get into it again. I did talk about it this morning quite a bit. Not a fan of that stock right now at all. I would think about it. If this guy comes out and says stuff just randomly like that, how can you, it's very hard to trade that stock because you don't know what you're going to get. Is he going to be in a good mood? Is he going to piss someone off? If he's going to, it's not good to do that during market hours. He's purposefully trying to manipulate the price of a stock right now. That's not really great. It's not a good Good call. Going against Reuters news publicly during market hours, that makes him look like an ass. Nope, it wasn't after hours. He said it during market hours. That's why the stock rallied 3 points on Friday and then came back down. He contradicted their Reuters statement on Friday. We were Matt. Remember we were listening on the Squawk Box? Yeah, we have a Squawk Box here, guys. But we don't mess around during market hours, Friday. All right, breakout level here. Yes, Johnny. All our potential trades. More importantly, how to read the market just like I do. Okay, that's really what you need to be getting here. Your stop would go somewhere right below this pivot right here, 166.53. We would go 18 days out because it's a perfect time right now. You don't want to go short term right now. Markets could get very choppy. You would look at the 73 call delta, which would put you at the 170 call right here. And by the way, folks, I'm going live at 1 o'clock, and I'm going to be talking about something totally new, interesting, and educational. You have not heard me talk about this before, and I highly recommend you listen and listen good. It's going to be brand new, and it's going to be very, very good, and you guys are going to learn a lot. And if there's one thing I would apply, if there's one thing I would change about your trading, it's what I'm going to be talking about on at 1 o'clock. So don't miss out. It's going to be really good. It's only going to be about half an hour too. Right here, 72, 170 calls. Let's move on. APP. A little overbought. We're going to skip this one. I want to see it closer to the 8-day EMA, especially right now. Hasbro. Also, ooh, yeah, too much, too much. Thank you, David. Edumacator. That's perfect. Now, we're going to skip this one. But here we go. This one looks good. Not that far off from the 8-day. Right here, I put a stop right around the 67-ish area. Oh, it'll be good, Cyrus. It'll be good. The options just suck for this. I mean, 62 delta. Otherwise, you're going to be paying up. Okay. Next is APO. Also very choppy, but starting to break out of its range right here. It's very important. But I don't like the 8-day EMA. We're going to hold off on this one too. This one we're going to hold off. I don't like anything right now that's too far removed from the EMA because we're in a choppy phase right now. We're not in a trending phase. And if I give you these, you'll be a sitting duck. And I don't want you to be a sitting duck. This one looks good. It's not that far. It's still in its range, kind of like Amazon. Anastasia, don't use a percentage. Use your eye. Your eye is more accurate than the percentage. It depends on the stock. Like if you look at this stock, it doesn't look out of whack. It doesn't look out of range, but it's still making a higher high. It looks delicious right now. I'd take a bite out of this stock if I could. It reminds me of Apple. It reminds me of Amazon on Friday. So right here, I would put my stop around 112, 40-ish level. 18 days out, 75 delta, 113 call. No, I don't consider this overextended at all. Look how it's still with it. How can it be Okay, let me ask you something, Anastasia. Look at the last. Look at the last 1, 2, 3 trading days. The price range is inside more than 70% of that range. A rule of thumb is when price action is 70% inside previous few days, that's a choppy market. If something is choppy, it can't be running away by definition, or even by looking at this. But you can tell. I mean, without all of that, without all of that nonsense I just went through, you could just tell by looking at it. And that's what I'm trying to get you guys to see. If you come here and you watch what I do, you will know without me after a while because I don't change things. I look at the same damn thing every day, and you know that. The rule of thumb is look at the last few days. You want to be if your trading range has 70% of the trading from the last 3 4 days, you're choppy. Um, 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 um. Right here. No, not right here. Right here, 75. Right here, 113 call. That's the last call I have for you. Now we move into puts. Now the puts actually are getting me more excited. 5 breaking low. Probably will wait for it to come up here, but remember, it's easier for stocks to go down. Stocks have a predominantly downward bias unless someone is buying them. So nothing really has to happen for this to cool off except strong buying. Um, yeah, I like the stock. It, we shorted it right here, made a little money on it, went against us, and then boom. Um, I would put a stop like right here, about 1 second. And Matt too, he doesn't mind buying selling breakdowns on shorts, but he doesn't like breakouts to the long side. Am I right, Matt?
Correct.
See? I know who I'm dealing with here. I know who my customers are. 170, 130. We're going 11 days out. We're going 75 delta, 175 put right here. The RSK. I remember this one. Do you? You remember this one from a few weeks ago? Nothing changed. Stop would be right here at 233. We would go 11 days out. We would go to a 78 delta. The option spreads are crap. I would just do the underlying 230 put. Next one, Lamb Weston. I've been looking at this baby all day today. All day. Breaks down, just goes down like this. Looks fantastic. It's actually on my short list right now. Just keeps breaking down. Stop would be somewhere right above this pivot, about 80, mid 83s. 11 days to go. 67 delta or 75, one of these two. 82.50 or 85 puts right here. Probably D's because the spread is better, but I would go with that one and just work the order. Next one, Jack. Hey, do you guys remember this one? I gave it to you here. I gave it to you here. I gave it to you there, and I gave it to you here. Right here, 65. See how boring I am? Nothing ever changes with me. Been doing the same thing every day for 30 years. 65.77. Call me Mr. No spontaneity. 91 delta, 65 put right here. Over and over and over, just doing the same thing. This one on this show, I told you last week that I will put an alert here and watch it, and if it breaks down, we're going to sell it. Tell me it ain't so because I usually put my alerts here. So I'm waiting to see if it breaks down towards the end of the day. I may want to sell this. I would put a stop loss right here, somewhere about 218 or so. Nothing, Adam. It's not a 95% win rate. It's a 95.4% win rate. It's funny, right? Um, so yeah, we would buy I may put this on later. I really like this. It's all good. 18 days out, we would go right here to the 72 delta, which has terrible spreads. So probably 68, 222.50 right here, right here. And you can work it and get it for like 15. You'd have to work it. I have no thoughts on Humana going up at all whatsoever. 15 $15 on a $300 stock is it's not real. I mean, remember these stocks don't go parabolically up. We just passed the VWAP on the way up. Look at here. Stuff. All right. Let's continue. Let's continue. Remember this one? Somewhere right around here, 277, 18 days out. Right here, 79, 275 right here. Guild. Oh, this is beauty. Beauty, beauty, beauty. Annette, I've defined VWAP several times. If you go to my YouTube channel and look at my featured video when this webinar is over, because it'll always show you whatever's live there, you'll be able to see a half-hour segment that I did on the VWAP and how to use the VWAP and how I applied the VWAP in there. All right. Good, Brett. So right here, 72.39-ish on Guild, 18 days out, 79 Delta, 71 put right here. 71 put. This one's my last one, Matt. Broke down nicely. Stop loss will be probably right there, about 42.50-ish level. And I'd like to go out about 18 days, and I would go to the 80, negative 80 because it's a put, so it's not positive, negative 80 delta. And that's a 42 put right here. Nice spreads. Better, much better than I expected, actually. I should trade the stock more often. I always thought it had bad spreads. That's all I've got for you, Matt. Take the seasonality. Now, folks, I have a class for you. I'm going to show you two rules in about 14 minutes. These two rules, if you do nothing else but apply these two rules, you will get your win rate will probably double. How do I know that? I'm going to show you what we did with these two rules and just picking stocks based on these two rules and just a couple of more factors. And we've been able to achieve a win rate of 80% over the last year. So if you want to see these are all swing trades. If you want to generate an 80% swing trade rate by using two stupid rules, I think you should be there in 13 minutes. Matt, I'm going to tune out and I'll see you guys in 13 minutes. You'd be foolish to miss out. I'm not kidding and I'm not trying to sell you anything. You'd be foolish to miss out. I'll see you guys in 13 minutes.
Okay, here is seasonality to the long side for your sectors. Not super convincing, but looks like a lot of long side action. I will get there in 1 second, Perry. Real estate looks strong. Honestly, everything looks decently strong, but let's check the short side. See, that's what I thought. Choppiness. Because we're also getting them showing up in the short side, which means we just have a lot of more random price action right now. And 10-day hold even furthers that. You see a lot of 50s, low 60s. Consumer discretionary looks strong, but other than that, for the most part, it is just mostly chopping around. Directional action. Very little directional action so far. What do you mean? It's in the same room. Yeah, it's a different room. I'll have the link. Stay here until or you can jump over there now. Yep. Yep, there's the link right there. Yeah, the number's half on the long side and shorter on the short side, 130. So slightly to the long side, but mostly just choppy. It's really not a lot to read into right now. I know someone asked me about gold. I should have sorted this alphabetically. Let me go back here. Uh, Strong accuracy, low profit factor. Let's look at 10-day hold. Yeah, not much. But as far as the chart is concerned, I think this is definitely a response to inflation at the moment and reports that it's not going down as much as it should. So we'll see. I mean, I think it's probably due for a little bit of a pullback, but sometimes you just don't know. Uh, uh I wouldn't be jumping in long at the moment unless I had a really, I don't know, that's just really overdone for me. It could go sideways though. I would just wait if it were me. I don't feel definitive one way or the other. Let's look at 10-day hold. Just not a lot there. C tech and consumer discretionary. It's pretty par for the course. Yeah, there's just not a lot here. We'll just have to wait and see how things shake up. It is Monday, so they're usually muted to downside. And I'll be looking this buy sideways. So that is what we're working with, which is not a lot. And in the meantime, we'll just hang out. However, there's the link for 1 o'clock. That's all I got for me. And otherwise, I will see everyone tomorrow.